Okay, guys, part two of the Bollinger Bands and Strategies video. On this one, I'll cover some strategies that I use when I use the Bollinger Bands indicator. So let me share my screen with you right now. All right. Let's see what we have here. So this is the Bollinger Band indicator that we built earlier. I'm going to do one little change to it, which is to add the basis line, which is the middle line, just to remind you again. So the Bollinger Band indicator is fairly simple. All it's doing is taking the simple moving average of the data and then giving you a window, a range, which is plus or minus 2 standard deviations from it. So you don't need to think about the details too much. The code is very easy to read. You just take the mean, which is called the basis, which is the simple moving average of the price. And you calculate what 2 standard deviations are, and you just go above the basis by 2 standard deviations and below the basis by 2 standard deviations. So let's quickly add the basis line. All right, so the basis line is in black here. As you can see, it's the one in the middle. So the whole point of using Bollinger Bands is to see how volatile price action is. I'm gonna hide this because we don't need it anymore. So when you're using Bollinger Bands, you're using this indicator to tell you uh, around the mean how much is the price fluctuating. So if I just zoom out for you, this is a 4-hour chart of Bitcoin. You see that mostly the price follows the mean. And interesting things happen when it extends outside 2 standard deviations from the price action. So I'll tell you a couple of strategies. So the first strategy is, so obviously by telling you that a lot of the price action happens within the bands, what I'm implying is that if you see that there isn't too much price action outside the bands, then the price will tend to play within the band. So here, for example, you can see Bitcoin going from the lower end of the band to the upper end of the band and back and forth. So one strategy that people typically use, I don't particularly use this one, is if you see the Bollinger Band hit the bottom end, if you see the price action hit the bottom end of the band, so this is called the lower end, then it's a good indication that if a candle is confirmed that goes back up, so you have to wait for a confirmation here. If a candle is confirmed that shows you that it's bouncing above the Bollinger Band, then there's a very good chance that it will bounce back and reach the top of the band. And once it reaches the top of the band, again, wait for a confirmation. So this little guy is poking out of the band, but if you see it going back down into the band, then there's a very good chance that now you're about to go to the bottom of the band. So price action generally fluctuates within the band in this way. Now, there are a few things you need to look out for. If a candle looks like it's about to poke out of the Bollinger Bands, don't take that as an indication. Wait for the candle to close and wait for a confirmation before doing any sort of trade. Obviously, this is not financial advice. I'm not telling you to do something. I'm just telling you the way I would use this indicator. So once we're talking about, so this is the obvious part, right? If you have a mean and you have a range around the mean, then if you see it reach the bottom of the mean under the right conditions, wait for it to go back above the mean. So consider the lower end of the Bollinger Band. If you see a confirmation candle taking you back to the mean as an entry point to ride it up to the other end of the band. All right. Now, interesting things happen if you see what happens when things go outside the band. So first of all, just as an example of not using this indicator, right? If you saw this candle and you saw it break slightly out of the band and you immediately entered here without waiting for the next candle to confirm for you that this is a breakout, then you would have gotten screwed because the price would start dropping after you entered. So always wait for a confirmation. Let's see another point where this might be helpful for you. So if you see the price about to break out of the Bollinger Band here in the bottom, and you shorted Bitcoin at this point, thinking it's about to break out of the band, so there must be a trend going downward, you would have been screwed because you didn't wait for the next candle. And the next candle is telling you that you're going back up into the band. That takes me to the second strategy that I wanted to share with you, which is that if you see something getting out of the band, so the price pokes out like this range, for example, and the next candle, the confirmation candle, rejects that action of extending out of the band and pushes you back into the band, then that is a strong indication of you going back to the opposite end of the band. So in this case, it was trying to break downward, but the next candle rejected it. So it went to the other end of the band instead. Let's look for another example on the opposite end of the band. So here's another example. It tried to poke out, the next candle rejected it, goes all the way down. Let's find another one. It tried to poke out, didn't poke out well enough, got rejected all the way down. It tried to poke out, got rejected, went all the way down. So this is a very good indicator if you know how to use it right. But remember, in all of these, wait for confirmation. So here again, it tried to break out, got rejected, going back down again. Here it tried to break out of the bands again, got rejected, stayed within the band. And you can see it retreated to the mean. Again, tried to break out, got rejected, moving back into the mean. Here's an example of what happens when you see something that breaks out and maintains that breaking out. In that case, then it's a very good sign of the trend being strong. Let's see another good example of a candle that breaks out here. This candle tried to break out. The next candle also closed outside of the band. That's a sign of a very bearish trend. Let's look for a bullish trend. Maybe somewhere around here. Yeah, so you see here it's in the band. Here it's poking out of the band. This guy closed up outside of the band. That's a very bullish indicator of the trend going up. So in general, the strategies that I want to convey are, while the price is playing within the band, in other words, while it's moving from the lower end to the upper end, you can use it as an indicator for, entering here, closing here. And those conditions are met if the volatility is fairly low. So if you have a nice and tight range like this, if the range is extended like this, if the Bollinger Band is expanded, then that's a sign that there's too much volatility. So you should be more careful. If a price action tries to get out of the Bollinger Band, but it's not confirmed, so it gets rejected back into the band, then it's a sign of moving to the other end of the bands. So that works in the bearish direction. So it tried to break out here, but got rejected, so it went back into the bands. And it also works in the bullish direction as well. Tried to break out, got rejected. Now it's a sign of the price about to go down. Yeah, so that's one way to use Bollinger Band. So use this to make your entry and exit points. Always play it safe. So don't use this as your one sole indicator. Use it as in combination with other indicators. The other cool thing about Bollinger Bands is that they indicate. So as I said, they indicate price volatility. In this region, there isn't too much volatility, but in this region, there's a lot of volatility. But there's also something called a Bollinger Squeeze, which is it's the so-called calm before the storm. If you read any technical analysis textbooks, um, if you see something like this, where a Bollinger Band is, it's expanded here, there's some price action, but then it's getting squeezed and there's very little price action, that's an indication for you to watch out for a trend. So in a situation like this, when you see a squeeze, it's a good idea to look at the candles and to see a confirmation of what's about to happen. So if you were in this situation, you would know that a squeeze is happening, so you'd keep your eye on Bitcoin and you'd see what the trend is. So you can see it's trending outward, but it got rejected back into the band. That's a very bullish sign. So already when you see this candle, you know that there's a sign to watch out for. It's above the basis line here, so you know that it's overall strong in this region. And as soon as you see this candle, now you look for it to break out of the Bollinger Bands. If you see the confirmation that it closed out outside of the band, then you know that this is a trade worth entering. So if you want to play this safe, I would have entered after this candle closed. So at this point, I would not enter anywhere lower because there's just too little information to make the decision, and play things safe. So the Bollinger Squeeze is probably one of the most profitable indications, one of the best signals you can get. What did I see recently doing that? Was it metal? Let's see. Yeah, so here's, where was it? Yeah, there's a squeeze. So as you see a squeeze coming here, it tried to break out and got rejected back into the band. So that's a very strong sign that a bullish trend is about to happen. And this is the calm before the storm. And immediately it crashed after that indication. So that happened multiple times, right? You saw it happen here, and then you saw it happen here again. This time, the price was lower from here to here anyway. So this is a very bad indication. So the price isn't trending upward, and it's not strong enough to break out of the bands. But you see, it's really trying to break out of the 2 standard deviation range of the Bollinger Bands. Let's see, what's a good breakout? So here's another example of a squeeze that leads to a breakout in the upside. So see, there's a lot of price action here. The Bollinger Bands are squeezing, and at this point, you have your eyes set on it. And so you're watching it, and here it does something interesting. It tries to break out. In fact, it does almost close outside of the bands. So this would be a region to keep watch of. And this candle pushed it back into the bands. And that's a very big bullish indicator once it starts finishing within the band that this is going to have higher volatility, and that's going to help you get to a higher price action. Okay, so this thing is, again, getting squeezed. So, I mean, we'll keep track of it. We'll keep track to see what's happening. But if I had to guess right now, I would say that this is still unclear, right? Because it almost tried to break out here, but it maintained within the bands. We'll keep an eye on it, and we'll see what happens. I'll make an update video when we have enough information. But there are very clear signs, right? So this downtrend, for example, was very predictable if you're just using Bollinger Bands. Look at this. It rose up again, tried to finish out of the bands. Next candle brought it back in. That's a sign that the bulls are exhausted. The bulls that did this are exhausted, and you're going to go back to the lower end of the bands. Yeah, so a really cool indicator. Again, it's amazing that you can glean all of this information from just an average with 2 standard deviations around it. But yeah, this is one of the really useful indicators. So use it in your trading. Let me know if this helps you. Let's discuss it if you have some ideas based on the Bollinger Bands. All right, I'll finish this video here.